I think post BOJ, post the move we've had in FX, we're definitely in a transitional phase for the Japanese rally. We don't think the story's broken, but the narrative is definitely evolving. And that's likely to be accompanied by the continued volatility and this, quite aggressive sector rotation that we're seeing. I mean, what we would say is that up until now, the Japan rally has really been powered by three main engines. So yen weakness, expectations of monetary policy normalization, and then TSE corporate governance reform. And that's really shaped the sector performance that we've seen since 2003. You've had outperformance from blue chip exporters, banks, lower PBR companies that have been responding to TSE pressure, and it's been the strong yen beneficiaries, small mid caps, and domestic demand names, ex-financials that have generally lagged. So, I think we can now say that the rules of the game have definitely changed, particularly around rates and FX, and that's really causing a reassessment of sector positioning, and that's, I think, what you're seeing playing out in the price action over the last couple of weeks.
Bruce,
sorry, on you go.
Yeah, Bruce, I want to get your take on this. I mean, just how much stronger do you see yen getting from here, and especially in the wake of the central bank governor Ueda saying yesterday that, look, 0.50 is something that wouldn't be out of the realm of possibility. We're already up at 0.25, so he's talking about a doubling of rates. Is that what is shocking this market?
Well, we've had YCC and NERP in place from 2016. So, I think if you're reading, there's two ways to read the sell-off that we're seeing, I think. One is to say that, excuse me, investors don't believe that, the Japanese economy can take a 25 bip or a 50 bip policy rate, and that they don't think Japanese corporates can make any money with the yen below 150. That's one way to look at it. I think the other way to look at it is that you're basically seeing a very crowded market. You're seeing investors have moved into quite a narrow group of companies that have had momentum for an extended period. Everybody's on the same side of the boat. When some of the fundamentals change, you do see these very aggressive pullbacks and reversals. And to put this in context, over the last 2 years, we've seen about 7 of these really sharp momentum reversal pullbacks. They tend to be sort of 7-8% in terms of peak to trough. It usually takes about 2 months for the market to recover from them. The price action that we're seeing now, the sector rotation that we're seeing now, very similar to what we saw, say, in December 2002 when we saw the first move on YCC. So, yes, right. It's very painful. Yes, there's a fundamental shift taking place in the market, but it's not unusual. And I think you also have to think about seasonality in Japan. The June to September, or the July to September quarter in Japan is always where we have weakness. So there's a number of things playing out.